So Fed next steps, we've already spoken about the pressure that I think the Federal Reserve is under, pressure that has been put on the Fed by President Trump. He wants to see interest rates cut significantly. If you compare the Fed to what they're doing in Europe, Europe has cut interest rates a number of times already. We here in Canada have cut rates a few more times in the US. It's the US that seems to be not wanting to cut. They seem to continue to take a wait and see approach. However, I will say that perhaps the Fed is starting to warm up to the idea of cutting rates. And for most of the Federal Reserve governors, they do this dot plot. So they basically indicate where they stand. All the different Federal Reserve members, they indicate where or what they believe will happen between now and the rest of the year, how many Fed cuts they expect, and most of them are still saying one or two. So I think you may see some Fed rate cuts in the second half. And some of the quotes by some of our Federal Reserve governors are clearly stating this. We have a couple of quotes that were recently made. Governor Waller was quoted recently, and we can put up his quote right now. There you have it. If you're starting to worry about the downside risk to the labor market, move now. Don't wait. Why do we want to wait until we actually see a crash before cutting rates? So I'm all in favor of saying maybe we should start thinking about cutting the policy rate at the next meeting, because we don't want to wait until the job market tanks before we start cutting the policy rate. So that's what he was saying. Now, keep in mind, he's talking about jobs going soft, and we're seeing that in the US. We're hearing a lot of companies. I think off the top of my head, Microsoft has announced a bunch of job cuts. They're the latest one, or the last one that I heard of, cutting jobs, and they've been cutting actually on a frequent or regular basis. Not to mention some of the other big S&P 500, Fortune 500 companies that are cutting jobs, whether it's because of artificial intelligence taking those jobs and replacing people, or whether it's just a slowing economy. And many believe most of the job cuts are due to a slowing economy. Our next quote here is one from Michelle Bowman, and she just said this recently: should inflation pressures remain contained, I would support lowering the policy rate as soon as our next meeting in order to bring it closer to its neutral setting and to sustain a healthy labor market. So once again, talking about the labor market, talking about they believe that the labor market and a softness in labor is what they're focusing on more so than the inflation rate and price stability, because price stability doesn't really seem to be, there's not really a problem with price stability right now. We're not seeing inflation move higher in the US as yet. On our side here in Canada, we've seen core CPI moving a little bit higher. So many believe that perhaps Bank of Canada, where they once thought they would be cutting next meeting, now we're hearing rumblings that maybe the Bank of Canada does not cut if inflation continues to show strength and move higher. Our next chart here, Fed rate cut expectations. This is something that came out of CBS News. Federal Reserve to make next interest rate decision. There you have it. They believe that there would be 3 cuts, perhaps a half a point. That was a survey by CBS. Half a point followed by 2 quarter-point cuts towards the end of the year. I have not heard of that aggressive of a reduction in rates. I've heard 2 cuts, and I was anticipating 2 quarter-point cuts, so 50 basis points, maybe between 50 and 100 basis points. But to talk about the rate cuts at least 1 full percentage point, that may be a little bit higher than the Fed is talking. Our next chart here, I think, is a fantastic chart. This is the Fed funds rate versus the S&P 500. So you can see, and I want to just point out a few things. When the Fed funds rate goes higher, and probably the best one would be the last time. So in 2022, we talk about this on the show all the time, Fed raised rates, I think it was 11 times. You can see the blue line on the far right-hand side, not the last bit, but let's say somewhere around 2022, if you can look at that, you see the markets fall. And if you look at certain points in time, 2000, markets fall, rates went up. You can see, let's say late, maybe 2007, 8, markets fell. We had a financial crisis. We had interest rates running up into that crisis, and then obviously rates were cut basically to zero where they were until maybe 2016, 17, and you saw the markets rise. So there's definitely a relationship between interest rates, the Fed funds rate, and the stock market performance. And so what does that mean? Well, if you believe that the Fed is going to cut rates, if the Bank of Canada is going to continue to cut rates, then this market should move higher based on historical values and what's happened obviously in the past. Our next couple of charts show U.S. jobs and employment. Unemployment rate seasonally adjusted. It's been pretty flat in the U.S. You can see that's on the left side. Non-farm payrolls, month over month change. Yes, it's come down, but still, well over 100,000. Number in and around 135, 150,000. That's where the employment numbers have been. We have a next chart on Canadian employment change, and you can see we're sort of flatlining it here. Nothing, no major change there. So overall, it is the mandate for the Federal Reserve. It's that dual mandate, jobs. It is the dual mandate of looking at price stability that the Fed is going to look at before their next move. And clearly, Jerome Powell does not want to be pressured and will not be pressured into cutting rates too soon. He wants to see the data. He says he's data dependent. The Federal Reserve, as a governing body, says they're data dependent. And we'll have to see come Friday just exactly what the data tells us.